Hello everyone, this is Evan here from the Trade Risk on Wednesday, October 12th with a midweek market recap video. We are first going to analyze the current market environment, we're going to look at some other markets, and then finish off with some sector analysis. Be a little bit shorter today, focus on the market environment and some of the major markets out there. It's a few minutes before the market closed right now, so we don't have the official closing prices, but let's start running through. We'll start with the S&P 500 SPY ETF. You can see, looks like it's going to be closing, about 35, 40 cents higher, less than 0.25% on the day. And really, the big news was yesterday's session where we had a 1.25% sell session in the S&P 500 SPY ETF. So let's take a look at this range again. We've talked about this range for quite some time now. Nothing has changed with the levels that we're watching. Notice yesterday we actually got right down to the lower end of this range, almost tagged this 212.50 level. But here's what's important, and here's a couple of things that stand out to me. So yesterday we clearly broke this kind of short-term support level. Notice going back for the past basically 2 weeks, every time we sold down to this 215 SPY level or sub 215, we always had a nice, dollar gap higher the next day. So take, for example, September 29th, the following day we gapped higher. Take this day right here, the 4th of October, we had a gap higher of about 75 cents. And then we had this gap higher most recently after the sell-off from last Friday, started the week off with a gap higher about $1. So every time we kind of sold down here, it was a buying opportunity. It was a tight trading range. Sellers kind of just dried up at the bottom end here, and we were able to just kind of pop back up on each of those cases. Notice now, we didn't have that same behavior today and between today and yesterday. We had a strong sell bar. We snapped support. Notice the range was even wider, and we came in basically flat today, and the market isn't really giving us too many new clues today as to, there's clearly no downside momentum follow through, but yet we didn't really sustain, much higher prices. So we need to kind of just wait and see if we can continue with this new bearish momentum, or is this going to be yet another buying opportunity within the larger context of this range, support down at 212.50, resistance up here at 217. That's sort of the landscape we're still in. There's certainly some bearish momentum that picked up with yesterday's sell session using this minor support level, but to really get things going and to really kind of accelerate on the downside, you're going to need to see follow through below this 212.50 level, essentially yesterday's lows. The other important note is on the weekly chart. Notice what we had coming into this week. We actually had back-to-back inside days or inside weeks with the S&P 500. So notice back here, the week of the 30th, we were contained completely within the 23rd, the week of the 23rd trading. And then the 7th, which was last week, was completely contained within the 30th. So we have back-to-back inside weeks. That just generally means ranges are compacting. And, typically you have expansion of volatility and range once you start to break outside of those highs and lows. And notice we are, again, back below. Yesterday we did break below the previous 2 weeks lows. So keep that in mind. If the bears can continue lower, there's definitely a good amount of supply and probably complacency in this general range where you could start to really accelerate on the downside. Again, not saying it has to happen, just saying be aware of the risk out there right now. But for now, it's contained. We had a quiet session today. Let's kick the can down the road this week. See how more of the earnings releases are going to shape us, because we do have more and more of those starting to come out now as we progress. So that's sort of the landscape here with the S&P 500. If we look at the IWM, notice we did have the same kind of selling pressure really pick up here as well. Yesterday we were down almost 2% in the small cap. So again, you're seeing a very large expansion in range here to the downside. You're seeing short-term support broken, and you're also seeing again, a little bit of volatility in today's session. You saw a probe lower, probe higher, and then you're basically closing flat on the day. So not giving you a whole lot of clues or signals, on top of what we already had yesterday. So again, below short-term support, 120.50, that's going to be a bigger level. Same kind of scenario though as the S&P 500. And the Qs also getting hit pretty hard yesterday. Notice Monday we had a push to all-time highs. Granted, you had to fade off those highs, but you completely gave all that back and rejected back into this old range. So again, it's kind of caution across all fronts in the near term, and the Qs are certainly no different. The one last point I'll make is in the S&P 500 is, yesterday we came into the week with that nice dollar plus gap higher, and then an initial push higher in the beginning of the day. There were a lot of names working. There were a lot of breakouts working. Breadth was actually strong, but we did finish weak, right? Gave you a little bit of indecision here based off this pullback off of the highs, but things still look generally good. And again, with the gap down yesterday and that sell pressure, that's really a fast rug pull. You got a lot of false breakdowns. You had a lot of short-term damage in charts. And at the very least, we need to sort of heal that. You're starting to, I guess, see that today on maybe a perhaps slightly constructive side, that some of those charts are maybe trying to just kind of catch their breath. But again, it just speaks to the bigger picture that we're going to need a little more clues here, and you're going to want to use this 212.50 level as sort of your bigger picture range. If we get into some other markets now, TLT has found some support here. Has been a pretty quiet week for it. Notice we did undercut the lows from early September. This pivot low right here made back on the 15th of September. But notice this is where we're sort of hammering out of today, is where previous resistance was earlier in 2016. And in fact, if you go all the way back, this has played a key level. This 132 area, also this kind of gap down right into here. So there's definitely some prior memory here. At 132, you're starting to see price perhaps react to it a little bit, but still, bears have momentum, right? Sellers are in control here on the daily time frame. 8 and 20 are headed lower. You do want to be cautious, but recognize you are at a level where we could potentially see at least some type of bounce. Get back above, 133 and this prior pivot low, then maybe you have something to work with, or at least place some risk against. If we move into oil, pulling back a bit today, but still overall very strong, still above a sharply rising 8-period, 20-period moving average. We stalled a bit yesterday, had a less than 1% move down, and then we're getting a little more follow through today. Very healthy action though, given how far we've come. Almost a 10-15% rally since just a couple of weeks ago. This is definitely entitled to a little bit of a pullback here, and bulls are in control here on the daily time frame. Similar comments here on natural gas. We've had a nice rally over the past couple of weeks, and then again you can see we're still very much above the 8-period, which is rising, above a 20-period rising. So you got bullish momentum here in natural gas. You're at year-to-date highs, or right underneath them. So again, this looks constructive. A little bit of a pullback is healthy. Let these moving averages catch up, develop a high-level base. Perhaps we can continue higher in natural gas and oil. If we go to the metals, gold, continue to look a little sloppy down here. Again, you've sold off pretty hard over the past week or so, and you can see they're trying to stabilize around this 119 level. Again, it's pretty messy. We were consolidating in this general area for the beginning of first half of 2016. So let's just see how that acts. Again, sellers still have momentum here on their side. Silver, similar situation, trying to stabilize. Messy chart. We had the breakdown, and we're just trying to see market stabilize a bit there. If we move into some of the sector analysis, not a whole lot has changed. IYT, I want to point this one out though, is holding up pretty well, all things considered. This has kind of come off and on our sector strength kind of analysis here in some of these recent videos. Notice where the transportation index is. It's actually still holding above a 20-period EMA, almost the 8-period EMA as well. So again, it looks it was down today, down yesterday certainly, but on a relative basis on where this is in the grand scheme of things and where some of these other sectors are, definitely some performance and relative strength here. So keep an eye on that. As far as the other two majors, technology continues to be pretty strong here, right? There's no change there. And energy still holding up pretty well. Again, it was hit yesterday and hit today, but still, recently it has been certainly holding up ever since the 28th of September. We had this big expansion bar to the upside. We've got that momentum just kind of grinding us higher. So those are the probably top three sectors to be looking for long opportunities if you do want some long risk in this market. On the downside, healthcare starting to really unravel a bit here. IBB as well. You can see now snapping some of this prior support made in early September around 280. That's concerning. XLU, of course, this has been kind of in the weak camp for some time now. A strong 2 weeks of selling off, trying to stabilize here. Again, still on a relative basis, a little ugly based on the prior 2 weeks of selling. And then finally, home builders. We put this one up here, remember, as a potential good short candidate, as it kind of bear flagged down here after a weak start to September. Then we kind of held out near the lows. We've recently broken through support. We're making new lows. So materials, a little bit concerning here. Again, the US dollar's rising, so there's a lot of different factors at play that you could maybe attribute it to. Bottom line is price action is weak. So we'll end the video there. Hope you guys have been doing well recently. If they get the closing print of the market here, so it looks like we're ending 24 cents higher, about 11 basis points here on Wednesday the 12th. So thanks a lot for watching, guys. Have a great rest of the day, and I will catch you next time.